Subscribe to our YouTube channel and press the bell icon to get the latest updates.
What was your favorite toy when you were younger? For me, it was my collection of G.I. Joe action figures. I would save up all my pocket money for months just so that I could add one more figure to my collection. Our favorite toy or possession is always the one that speaks most directly to us at a particular stage in our lives. And then as we grow older, our lives change. We have other favorites that give us what we need most at that particular stage in time. But we never lose our old favorites, do we? They're always with us. We just sort of add more of them over time. As adults, our favorite possessions tend to be our investments, particularly stocks. And just like our toys, we may buy new stocks every now and then based on a market trend or tip at a point in time. But we never lose our old favorites that we hold on to and treasure, accumulating some more at every opportunity that we get. With over 5,000 companies, the Bombay Stock Exchange has the largest number of listed companies in the world. Yet, there are just a handful of companies that are the most favored amongst investors across generations. Hi, this is Yazad, and thank you very much for joining me today. In today's video, we unravel the 7 most favorite stocks in India based on retail holdings, ranked in increasing order. And I'm going to share with you some surprising trivia about these companies that you may not be aware of. Asian Paints is India's leading and Asia's third largest paint company, operating in 15 countries with 26 paint manufacturing facilities in the world. The company caters to consumers in over 65 countries. As per the shareholding pattern for the quarter ended June 30th, retail investors hold 11.9 crore shares. That's 12.5% of the total shareholding in the company. The market cap of the company at the current market price is around 2,70,000 crores, of which retail investors hold shares worth 40,700 crores. Asian Paints has delivered a 24% CAGR over the last 30 years. Rupees 1 lakh invested in the company in 1992 would be worth over 5.6 crore rupees today. No wonder this stock continues to remain a favorite amongst investors. Here is some interesting trivia about Asian Paints. Now, everyone has heard about Apple, Microsoft and Google, which were born in garages of their founder. But long before these companies, in 1942, our very own Indian company, Asian Paints, was founded by 4 friends in a small garage in Mumbai. By 1967, it had become the largest paint company in India. In 1970, Asian Paints bought a mainframe computer for 8 crore rupees, becoming India's first private company to ever buy a computer. This was 10 years before ISRO and IIT Bombay had used the supercomputer, and 21 years before any other company in India used it. The computer was not used for administrative processes, but for demand forecasting and improving service levels across the country. Infosys, India's second largest IT company, has consistently ranked amongst the most respected companies in the world. Retail investors hold 30.5 crore shares in the company. Now, although that is only 7.2% of the total shareholding in the company, it is valued at over 43,500 crore at the current market price. Infosys has remained investors' favorite stock for a while now, but when the Infosys IPO was launched in June 1993, it was undersubscribed and had to be bailed out by its underwriters. Rupees 10,000 invested in the IPO is now worth over 2 crore rupees, along with almost 20 lakhs in dividends since then. You want to know some fun facts? Today's second largest IT company did not have a computer for 2 years when it was established due to lack of funds. It took Infosys about 2 years to buy a high-quality computer with its own funds. Before Infosys, Mr. Narayan Murthy, founder of Infosys, had failed at his previous startup Softronics and had no money. Murthy borrowed 10,000 rupees from his wife Sudha Murthy, who was an engineer at Tata Steel, and started the company along with 6 other friends. Surprisingly, Narayan Murthy was not the first employee of the company. It was S. Radwan. In fact, Murthy was the 4th employee, as it took him 1 year to finish his pending work with his former employer, Patni Computers. Where there's Infosys, TCS is sure to be around. And just like TCS ranks above Infosys as a leading IT company in India, Year 2 on our list, TCS finds itself a spot above Infosys as the 5th most held stock by retail investors. The promoters hold a majority stake in the company of 72.3%, leaving very little free float in the market. Even yet, the 4.4% held by retail investors in the company is still valued at over 50,000 crore rupees, making it the 5th most favorite stock on our list. TCS has created phenomenal wealth for its shareholders since its listing in 2004 and has always been amongst the most admired companies of India. If you had invested 1 lakh in TCS shares at the issue price of 850 rupees in its IPO in 2004, the value of that investment today, over 18 years, would be around 32 lakh rupees, a return of almost 3000% on your investment. The company continues to dominate the information technology industry in India, and as the second largest IT company, now has set a goal of $50 billion globally in revenue by 2030. Here is some interesting trivia. In 1970, TCS acquired an ICL 1903. However, the stringent import restrictions on the private sector meant that TCS received permission to import the computer only after committing to export twice its import value over the next 5 years. This effectively oriented TCS to look outside to drive its business. And this was just the beginning of the Indian outsourcing model. Just 6 years later, the company crossed the $1 million US mark in export revenues in 1976, becoming the top exporter in India. Ironically, in 1992, TCS set up the core trading platform for the newly created National Stock Exchange, on which it went on to become the first Indian company to reach the $100 billion US mark in market capitalization. Larsen Toubro Ltd, commonly known as L&T, is India's largest multidimensional engineering company and counted among the world's top 5 construction companies. Much before Make in India became a buzzword, L&T has been into making outstanding offerings not only to India but also the world. This has made the company synonymous with the growth of the nation, instilling pride in its shareholders. Larsen Toubro is not a typical promoter-driven company. In fact, the company has 0 promoter holding and is one of the few truly professionally managed companies in India. Retail investors hold 20% stake in the company, valued at close to 55,000 crores as on date. The company has rewarded investors with a mind-boggling 10 bonuses over the last 7 years, and the CAGR for L&T investors over the last 20 years stands at an impressive 25.6%. Want to hear an interesting tidbit? L&T has a dramatic saga of hostile takeovers. In the 80s, when a British businessman Manu Chabria started acquiring shares of the company, the management soon acknowledged that he was interested in taking over L&T. The chairman of L&T approached Dhirubhai Ambani to protect L&T from the takeover and invest in the company as a white knight. Ambani didn't let the opportunity pass and bought 12.4% from the open market. But unfortunately, Ambani had a different agenda. He continued to buy shares from the open market and increased his holdings to 18.5%. Soon, the tables had turned. It was evident that Ambani was the one trying to take over L&T. However, when Congress, allegedly a supporter of the Ambanis back then, lost power in 1989, the new government intervened, making sure that the Ambanis were out of the company and they were forced to resign from the board. Following this, Ambanis remained passive investors in L&T for over a decade and in 2001 sold their entire stake to the Aditya Birla Group company Grasim, L&T's competitor in the cement industry. The company fought tooth and nail against the entry of the Birlas, and after months of negotiations, Birla finally exited L&T, selling its stake to an employees' trust fund by L&T employees in June 2003. As a trade-off, Birlas acquired L&T's cement division and named it Ultratech, but the prey itself became the predator. In 2019, the acquisition of Mindtree, one of India's leading information technology companies, by L&T made headlines for several days as a result of it being India's first hostile takeover in the IT sector. Ask any old-timer in the stock market the top 5 stocks to buy, and there is a high probability that the list would include Hindustan Unilever. That was just how a whole generation of investors made huge wealth. No wonder Hindustan Unilever, or HUL, is one of India's most favorite stocks of all time. With nearly 90 years of heritage in India, HUL is India's largest fast-moving consumer goods company. The company has been rated as the most innovative company in India for many years. As the shareholding pattern for the quarter ended June 30th, retail investors hold 26.3 crore shares. That's 11.2% of the total shareholding in the company. At the current price of 2,500, this holding is valued at a staggering 67,000 crores, making it number 3 on our list of most favorite stocks of India. Loyal shareholders held on to shares of HUL even though it went into a coma for 13 long years between 1997 to 2010, where the stock price hardly moved. But since then, the company has compensated investors by becoming a multi-bagger with a CAGR of 21.3% over the last 12 years. Want to hear a fun fact? What do 9 out of 10 Indians have in common? On any given day, 9 out of 10 Indian households use one or more of HUL's brands. HUL has been amongst the largest spenders on advertising in India over the last few decades. In the financial year ended March 2022, the company spent over 4,700 crore on its marketing. And its advertising strategy has been one of the key reasons behind the company's success in creating leading household brands over the years. One such case is of Close-Up toothpaste. When launched in 1975, Close-Up just wasn't able to offer much resistance to market leader Colgate. In the 80s, HUL relaunched Close-Up in India as the first ever gel toothpaste packed in a transparent tube, and its target was young Indians. Close-Up offered something new and surprising in fresh breath, shiny teeth, and the resulting confidence for young men and women. The advertising, featuring young people in various romantic situations, supported the message. The impact was instantaneous. Over the next 2 to 3 years, Close-Up grabbed nearly 20% of the market share from a shell-shocked Colgate. Which is the best bank in India, the leading bank in India, the favorite bank of India? No guesses here, it's HDFC Bank. And perhaps that is why it also finds itself in runner-up position on our list of most favorite stocks of India. HDFC Bank was incorporated in 1994 as a subsidiary of the Housing Development Finance Corporation, HDFC. It went public in 1995, and to date it has generated a CAGR of 31% for its shareholder. That means if you had invested 10,000 rupees in HDFC Bank's IPO in 1995, today your investment would have grown to 1.52 crore rupees. Current market cap of the company stands at 8,30,000 crores, making it the second most valued company in India. Retail investors hold 48.8 crore shares, the second highest holding by small investors in any company in India. This 10.8% stake is valued at a colossal 74,000 crore rupees at the current market price. Did you know, when approached by now fugitive businessman Vijay Mallya for a loan, former HDFC MD and CEO Aditya Puri offered him coffee but refused to extend a loan even though he was his friend. Hence, it was one of the few banks which had zero debt exposure to Kingfisher Airlines. Such clear thinking about lending and risk management is why the stock commands one of the highest premiums across global banks. Deepak Parekh, who headed parent HDFC Ltd, wanted to call the new bank Bank of Bombay because it was only one of the 10 new banks set up after the 1991 reforms to have its headquarters in Mumbai. Parekh is not on the board of HDFC Bank but attends most of its board meetings as a special invitee. And finally, we are at the end of our list. The most favorite stock of India is Reliance Industries Ltd. Investors love profitable companies, and perhaps this company is loved even more as it happens to be the most profitable company in the country. Reliance Industries Ltd has been an investor's favorite since its IPO in 1977. And why not? The stock has been the finest investment proposition ever seen by an Indian shareholder, doubling investors' wealth every 2 years for the last 45 years. An investment of 10,000 rupees in the IPO of 1977 would have turned into 5.18 crore, a massive 5,18,000% surge over its issue price. In the 70s, participation in the Indian capital markets was largely limited to rich businessmen and brokers. When banks and financial institutions refused to lend money to Dhirubhai Ambani for his new projects, he brought first-time retail investors into his then relatively unknown company by floating an IPO. This was the first time funds were raised from the masses, in the process creating one of the world's largest shareholder families. Retail investors hold 49.4 crore shares in the company, valued at a mammoth 1,25,000 crore, making it the largest retail holding in any listed Indian company. Here are some very surprising facts about Reliance that you might not be aware of. Contrary to popular belief, Reliance did not start its business with the textile industry, but rather by selling spices. Here's another interesting fact. Reliance Industries is Asia's largest mango exporter. After receiving several warnings from the Pollution Control Board over its refinery in Jamnagar, in 1997, Reliance decided to create a mango orchard near the refinery to curb pollution levels. The wastelands near the Jamnagar refinery of Reliance were then converted into a green belt, and around 1.3 lakh plants of mangoes of over 200 species were planted there. Today, the company produces about 600 tons of mangoes a year. Here's one more fact. In 1986, the company's annual shareholder meeting was attended by as many as 30,000 shareholders, a record in India's corporate history. As no hall in Mumbai could hold that number, the meeting had to be held at Cross Maidan. As on 30th June 2022, the retail holding in companies listed on NSE stood at 17.5 lakh crores. It is phenomenal that just 7 of these companies on our list contribute to almost 26% of the total retail holding value. That's 4.5 lakh crore. And it doesn't look like these most favorite stocks shall fall out of favor anytime soon. That's all we have for this week. Hope you enjoyed this video. Thank you so much for watching. Happy investing. Goodbye.